So we've been keeping our eye on this Bitcoin head and shoulders pattern, which we said was going to play out. And yesterday when we got onto the show, I said, look, that neckline had been broken. And if it does get broken, then we're going to start moving down to around 24,000. That's what my prediction was. Now we broke below this neckline. And actually, if you look at it, we've actually bounced on a very, very, very key level. So I'm going to zoom out for you guys. I'm going to show you. If you look at the 200-week moving average, which is the measure of the long-term Bitcoin trend, what you can see is that we literally bounced on that 200-week moving average. The question is whether this shakeout was enough to get the froth out the market. And specifically, when I say froth, I'm talking about the altcoin froth. I'm talking about the meme coin froth, because that was a sign for me that this market was too frothy and that we needed some kind of cool down. Question is that all out the market? And we're going to be talking about that here on the show today. We're also going to be talking about this tweet over here that Elon tweeted, because Elon tweeted that there's an economic enema en route. Now, a lot of politicians are disagreeing with Elon around this potential economic enema, but I've got a guest here today. I've got Hugh Hendry here with us today, and I think he agrees with Elon around this economic enema. And then after all of that, we've got some big altcoin news, and today we'll be looking at the altcoin news not on crypto bubbles, but actually on a completely new kind of bubble, the banter bubble, which I promised you guys that we would launch today. So for the last time ever, I'm not going to say for the last time ever, but I'm going to say for the last time in a long time, we're going to play the Get Out of Bed song. And I think it's time to move on. It's the last time in a long time. So I'm going to play it, enjoy it, because it's not going to be on every day anymore. Get out of bed, guys. Let's do this.
Get the fuck out of bed, bitch. Go. Get up and get the guy go. Time to wake up, bitch, get up. Get up, get up.
Okay, wakey, rise and shine. It is one of the last times we're going to play it. We're not going to play it every day anymore. We used to play this every day, but I think it's time we grow up and we start playing other songs. And in that spirit, listen, if you guys want to create us another song, like a Ran, He's Our Man, or like a Sheldon the Sniper, go for it. That could be the new intro song for the channel and for the show. We have been looking for one for a while. I think it's time that you guys make us this song or whatever, this intro song. Anyway, I know you guys didn't believe me when I said to you yesterday that we are going to launch the Banter Bubbles. Here they are, the Banter Bubbles. Okay, now it is version 1. Okay, so bear in mind, it is version 1. We just launched this, as we said, launched today. You guys are the first people seeing it. And the reason why we launched it was we wanted a Bubbles program that when you wake up in the morning, you want to see what's moving, but you also want to see why it's moving. So we created these bubbles with a chat. So basically each bubble has a chat, and we're going to try and build online communities inside these chats so that you can see why tokens are moving up and down. It is live, but it's a beta version. It's a testing version. So go out there, break it, have some fun, go and have a chat. Over the weekend, we'll probably enhance the bubbles a bit. We'll add the exchange functionality so you can trade directly from the bubbles. And then we're going to be bringing a whole lot more features. People are asking for the link. 𝗿𝗏𝗶𝗆𝗆𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 and our Friday banters, and it is a banter today. I've got a guest here, and there is a banter today. Guys, I'm getting a terrible echo on my sound. It is a Friday banter, so it is a Friday banter, and our Friday banters are brought to you guys by NordVPN. And I keep saying to you guys, they are the best VPN for crypto bros, for people who are in crypto. A VPN, you need a VPN because it does mask your IP address. But I actually want to share a story with you about how I used a VPN this weekend. And I just thought that I'll share this with you. Okay, so here's how it works. I'm a big Formula One fan. And I was looking to watch the Formula One race last weekend, which is, I really wanted to watch the Miami race. And so what I did was I went to look at how to stream F1 live. Okay, so that's what I did. And Ferdy, I think you're unmuted because every time you move, or someone's unmuted because I'm hearing them back in my ear. So what I realized was that if you want to stream Formula One, there's certain countries which provide free Formula One streaming services. So basically, if you live in those countries, like for example, Luxembourg or Austria, you can get free Formula One streaming services, right? So I went to F1, how to stream Formula One, and then I found that Belgium, Austria give free Formula One streaming. So what did I do? I went to my NordVPN and I changed my location to Belgium and Austria, and bang, there I was, and I was watching free Formula One. So listen, that's just another perk of using a VPN. We always tell you to use a VPN to protect your crypto and to remain anonymous, and also to support our channel sponsor, which is NordVPN, which bring you these amazing Friday Banters. So we do have a Friday Banter today, but before we get into the Friday Banter, let's quickly do some crypto and just catch up with what's actually happening, because this dump is a little bit, I would say, concerning. It's getting a bit of a bigger dump. So let's quickly look at it and see what's going on here. Remember, if you're not already subscribed to the channel, subscribe to our channel, and if you are here, just smash the like button. So we've already got 360 likes. Let's explode it. Let's explode it. All right, so here's where we are with Bitcoin. The dump has intensified. So this dump has really intensified, and we broke that head and shoulders pattern. But as I said to you guys, we bounced off this key level, this 200-week moving average, which we've been watching. Now, there are some people that say that because we bounced off this 200-week moving average, this dump could be finished. We also have another metric here, which shows us that this dump isn't as serious as, it's not a very serious dump. And that metric is the Bitcoin dominance. So what you can see through the Bitcoin dominance is that the Bitcoin dominance again spiked above this key level that we've been watching, this long-term key level that we've been watching, but then it went straight back down, and now it's at 47.66. So the altcoins are actually keeping their strength relative to Bitcoin, even when Bitcoin is dumping. So that's something to take note of. And also you can see that a lot of that is coming through the strength in ETH. So the ETH BTC chart actually bounced. Now, I think that this is a very good correction to take the froth out of the market, okay? In general, May is not a good month for crypto. It never has been a good month for crypto. Now, some people say sell in May and go away, but that's not right, because if you would have sold in May, you're selling after the dump. As I said to you guys last month, you would have to sell in April to avoid the May dump. So the adage needs to change to say, well, sell in April to make sure that you don't have the May dump and then you can go away. That's basically how it should be. So if I look at the May returns to date, we've had 4 positive months in a row. Now we're 9% down on Bitcoin. Don Crypto actually pointed out something quite interesting. He says that, look, we've had 7 red days in a row on Bitcoin. And the last 2 times that we had 7 red days on Bitcoin in a row, we had a bounce. And the time before that was actually the lunar collapse, which was the 8-day streak. So he says every time we've had that, we've actually had a bounce. And that's taken us, in the previous cycle, the last times that we had these 7 straight red days in a row, it took us to a bounce which led to a higher high, and then against another bounce which led to a higher high, and so on. And now we've had it again. And if you believe that the cycle is repeating, then you'd probably believe that this is actually happening. What we also saw is we saw the perpetuals volume actually increase. So what you can see is as this dip has happened, more people have taken leverage. See, so as this dip happened, more people have taken leverage. We had that leverage shakeout a few days ago, which we spoke about. But as this dip happened, people are taking leverage. Now, speculation is that could be people taking shorts to try and short this market. Now, you know what happens. If this is short, then as soon as we get a spike, these shorts have to start closing their positions, and then we get a short squeeze, and then we get the number go back up. So I think what I'm saying here is, even though May is usually a bad month for crypto, and in fact, if you look at the previous May months in crypto, on the 7th of May, 2020, Bitcoin went down 20% in 3 days. On the 8th of May, 2021, 48% down in 9 days. We'll never, ever forget that. On May the 5th, last year, minus 36% in 7 days. And so far this year, 12% in 6 days. So depends how you look at it. Either you look at it as if this is a shakeout of the leveraged hands, or a shakeout of the fluff, or you look at this as one of these big corrections in May. And then if you think it's going to get worse, you'll probably believe it's going to breach the 200-week moving average, and we're going to go way below that. I think this is a healthy correction. I think we've been needing this correction for a long time. I think there's been a lot of froth in this market, and you can see it by the meme coins. You know, we had meme coin mania, and we still have meme coin mania, but it's actually a little bit more collected, a little bit more calm now that you've had this little shakeout. And if you look at where we've been in the last couple of days with these meme coins, you've got Uniswap volume higher than Coinbase volume because the degens are basically playing these meme coins. And as I said, there's still too many coins being shilled on my timeline. We have to go to a point where people really start hating meme coins and start to believe that the meme coin mania is finished and that they'll never buy another meme coin. And then to me, that is when the leverage needs to get flashed out. Where we've been in the last couple of days is unhealthy. When people are buying meme coin after meme coin after meme coin, following their influencers and driving meme coins into a $1 billion market cap and $500 million market cap and $100 million market cap, when BitBoy launches a coin and that coin goes to a $50 million market cap, there is too much froth in the market. And luckily, I think that this is the beginning of the shakeout. We're starting to shake out all that froth. You can see it here. So you can see here. You can see 𝗵𝗵𝗃 is now going back to levels from before the big pump, which is as expected. 𝗧𝗥𝗘 pretty much going back to $14 million market cap, almost dead. I think actually Fred invested in 𝗧𝗥𝗘. We should find out from him how he's feeling. Okay, I think this is the Ben. So Ben is back at $20 million market cap. When I wanted to take BitBoy the bet, it was a $50 million market cap. So you can see the froth is being flashed out, and I think that is a very, very, very healthy sign. And I think that we could bounce and maybe get a short squeeze, but maybe just bounce off a 200-week moving average and then continue maybe going higher. That is, of course, if the economy, the macro economy, actually holds for us. And Elon came out last night and tweeted this. He said, we're actually en route to an economic enema. Okay, now, he said that, and a lot of politicians actually won't agree with him. So if you look at Kamala Harris, she doesn't agree with him because she was interviewed and she actually says everything was fine. Everything's just fine, she says, according to her.
What do you say to Americans everywhere who are concerned about a potential recession this year?
Well, so far, the economy is looking very good in terms of us addressing the concern that people rightly have about the cost of food, the cost of gas, and we've been able to address that in a variety of ways.
What do you say to Americans?
So she thinks everything's under control. They've been able to address the cost of food. Elon says there's an economic enema en route. So I don't know who to believe. I don't know if I should believe Elon or whether I should believe Kamala Harris because she's the politician. She's the vice president. Surely I should believe her. My next guest is a personality who is larger than life. He is a fund manager of a fund called Eclectic Capital. And I think he is more on the side of Elon Musk. I think. But I think we'll get it from him. Let's see if we can get him on. Can we get Hugh on? Ah, amazing. Hugh, welcome, my friend.
Oh, he's muted.
You're muted, sir. All right, there we go. Now we can hear you. How are you, my friend?
I'm well.
I'm wondering if you're I'm wondering if you're more of on the side of Elon Musk, where he says we're en route to an economic enema, or more on the route of Kamala Harris, who says that everything is just fine.
Well, Elon's an asset capitalist. I think he's just been reading some of my shit. Come on, I mean, the VP. Who is she again? Can't believe they've rolled her out. But yeah, bad things. The clueless people in power are messing up again. I'm preparing little slides. After this, I'm gonna go into the city of London. I'm in Notting Hill in London, and I'm gonna go and stand outside the Bank of England,
and
who they disgraced themselves again yesterday. They jacked up interest rates another 25 basis points. They said, "Oh, like, we're so sorry. We don't want to inflict pain. We know this is really tough on the poor folk, but we're still doing it." They're morons.
Okay, wait. So there's a hell of a lot. There's a hell of a lot to dig into now, and I want to talk to you about all of these things. So I think first of all, let's just go back to what you're gonna write on your signs and why you're gonna go and stand outside the Bank of London.
I'm going to do it because I'm an idiot. I have to correct you. I used to be a hedge fund manager.
Okay.
I ran a macro hedge fund, the 𝗙𝗿𝗶𝗃𝗃 fund, for 15 years between 2002 and 2017. But I don't do it anymore. And I think maybe I'm kind of one of the kind of wisest money managers that doesn't manage any money. I think of me as John Galt. System is so damn broken that I just can't. I'd rather be outside being a circus freak.
So
Okay.
what is Hugh doing now? So you used to manage a fund until 2017. What are you doing these days?
Well, the problem is, I was trying to do healing. I was on my beautiful island, St. Bart's in the Caribbean, taking some rays, surfing, tennis, yoga. But I still get the voices in my head. It's like really weird. And so starting maybe 2 or 3 years ago, I discovered Twitter, another portal on the world where you could go, "Hey, hi, can I tell you about the real world?" I mean, the real world from St. Bart's is preposterous, but yeah, I'm out there. I'm writing. I'm doing the Acid Capitalist podcast, which is out on Spotify, Apple. We publish on YouTube, Hugh Hendry official again, and then Hendry_Hugh every day now. I'm boom, 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 because it's all happening again.
So
the bad stuff's happening. The idiots. Just, there's one thing to get it wrong one time, but they keep doing it. So maybe we can so to give me feedback, right? So I'm trying to do the Bob Dylan, right? So let's see.
Okay, bozos.
So think of bozos jacking rates higher.
Got no clue.
They got no clue again. Pseudo science. You, my friend, had fed folly.
So this is the plan for today, Hugh.
It's a quiet day.
It's a quiet day. So I want to quickly, an asset capitalist. What is an asset capitalist? I want to try and get the definitions right here to make sure that I don't mess up the definitions.
The asset capitalism is when you look around, when you survey the wreckage of the economy that we're bequeathing to the younger folk. We made such a mess of it that you've got to be, the French use the word défoncé. You've got to be so high, you've got to be so out of it to kind of make any comprehension of what happens. There's, I say all the time, there's maybe 5 people in the world that understand money. Money's complicated. And the thing about money is you're not meant to think about it. It's meant to just work, but it doesn't work. So asset capitalism is, I'm kind of tapping the spirit of Hunter S. Thompson. I'm typically alone in the Caribbean drinking tequila, and I'm kind of looking at the world. I'm surveying the world from this kind of tranquil, beautiful, peaceful spot, and just kind of trying to spread some education. And it's a dare. I dare people. Look at me. I dare people to listen. I used to dare people to invest in my hedge fund. And that's the opposite, because everyone else wears I've got a suit jacket, but I've got a t-shirt, I'm very respectable. I'm Bernie Madoff. You can trust me. I play golf. I'm a member of all the highfalutin societies. Look at my tie. I've got a Prince of Wales knot. They're fraudsters, right? Only 5 people in the world understand money, and it ain't any of them.
So, okay. So you mentioned that everything's broken. Walk me through the things that you think are the most broken at the moment. And I think there's a lot going on. I mean, we could talk about de-dollarization. We could talk about banking collapses in the US. We could talk about rates going up too fast, too quickly. Like, walk me through how you see this. Where are we? I mean, I think maybe let's start off with the basics. And I think the basics are, what would you have expected the Fed to do after they realized that they printed too much money? What should they have done versus what they did? I think we know what they did. They raised rates very, very, very quickly to try and stop inflation. Do you think that was the right thing to do?
I think they've made errors at every stage of the journey. It's easy to kind of come on shows and just call people names. This is not I don't really want to participate in just a kind of the spectacle of mud throwing. Let's try and have a deeper conversation. But with regard to mud throwing, I have to say I am taking a note. I'm writing it down. All the people who confess and attribute legitimacy to de-dollarization, I got your name, and I'm going to ridicule you for the rest of your life.
Because you don't think that de-dollarization is going to happen, or because you? What are your views on de-dollarization?
It's preposterous. It's Chinese propaganda. It's the propaganda of the countries that are running out of money. I mean, again, I know this is complicated, folk, and I know it gets endorsement in newspapers. You've got to remember, newspapers used to be a kind of reasonably profitable business. I mean, Warren Buffett used to buy some of the franchisees. And then we got this thing called the World Wide Web, and profits for newspapers just disappeared, likewise for magazines. And so owing to that economic challenge, it's very hard to retain good, knowledgeable, skillful writers in the medium, which is print today. I mean, that's, again, trying to be rational and not being mean. But at least I want to say, if you're into kind of motorbike mechanics or sailing or some sport, if you buy a magazine, you'll kind of still get legitimate expert advice. You'll learn stuff. You learn nothing from newspapers. It's teenage scribblers.
I agree. It's
propaganda.
It's become really written press has become absolute garbage. But let's go back to de-dollarization. So, I mean, it is something that a lot of people are talking about. And there were, you can call them big headlines, propaganda that came out over a period of a long time. I'm going to see if you had President Trump coming out. I just want to play you this clip from President Trump.
China wants to change the state.
Sorry, James, can we just...
We'll be a second-tier country. We'll literally be a second-tier country if that happens. Now, you're losing Brazil. You're losing Colombia, South America. You're losing Iran. You've lost it. You've lost Russia. And if you haven't lost them yet, you're going to lose them. China's on the yuan, so China's gone. Then you see France going over. No, what's going on? We're losing. If we lose our currency, that's the equivalent of losing a world war. Our currency is what makes us powerful and strong.
So Trump came out and said that, and then we had like a whole lot of sensationalist headlines that said things like Saudi Arabia and China are building an oil refinery for $83.7 billion of yuan, and there's Saudi Arabia trade deals being done in yuan and not in dollars. What are your views? Why do you believe so strongly that there's not going to be de-dollarization?
Facts, logic, how economics works, all the kind of complicated stuff that Trump rides roughshod over. I mean, why are we quoting, someone who's been shown to be a rapist, or a very strange source to go for de-dollarization. Listen, you've got to separate. So let's dive into economics. Okay, China and the other countries have got a desperate shortage of dollars within their system. China has a closed capital account. They resist the ability of foreigners to buy assets. There's a quota which is carefully maintained. Of course, they ban the ability of their citizens to take money out of the country. India has pretty much the same, perhaps not as draconian, but a closed capital account. It has a managed exchange rate. South African currency is a basket case. It's on its lows. I mean, I'm not telling you anything you don't know. Again, you've got a country which is, it would seem the allegation overnight, is concealing shipments of weapons to Russia. I mean, how do you feel like that? How do you feel your government is representing you in South Africa?
Please, I don't even open that can of worms, because we spend 10 hours a day here without electricity. They've completely destroyed the electricity grid. So I think our country is a basket case. But I think more what I'm trying to understand is that the US dollar is probably in better shape than most currencies, but it's in bad shape. It's not in great shape.
What does that mean? I mean, currencies don't go to the gym. They don't have diets. I don't quite understand the metaphor you're using.
So, I mean, let me show it to you. What about, I mean, let's have a look at that. So this is the debt of the US versus the GDP of the US. That's the chart that shows it. I tweeted something about it this morning, and I said, if this was a company, what would happen to the management and what would happen to the share price? And now you have the US talking about potential debt default. Now, I think we've both been here for long enough to know that the US is never going to default on their debt. But I mean, I think as I said in my tweet, like, if this was a company, the share price would go to zero. The management would get fired. It would be put up for sale, right?
Well, first of all, it's not a company. It's a sovereign nation. And secondly, you are representing a flow, which is income, or let's think, instead of flow, you might say a video, and you're comparing that to a stock or to a photograph, right? The photograph, the stock is the total amount of debt. So you typically wouldn't, you can compare them, but you're drawing inferences, which then I think takes you away. A debt is a liability, and a debt should be compared to assets. And in our system of bookkeeping, debts equal assets. So another way of looking at that, you could, with equal veracity, you could have shown the assets of the United States compared to their income. And you would say, heavens, that's a company I'd really like to own. Look at the great wealth of those assets. Assets are like 4 or 5 times GDP. Yeah? So,
okay.
It's
fair enough.
The mind. But, de-dollarization, okay, we got to separate two components. So the headline, the news bombs are talking about settlement, and you mentioned that. So I've just got no issue with that. If you are a Brazilian exporter of soybeans or iron ore, and you're exporting that to China, and you want to accept red cabbage, sorry, I should say yuan or renminbi, the Chinese currency. I don't like saying yuan, such a kind of weird name, so I like to call it red cabbage. Accept the red cabbage, great, okay. However, the question is to the Brazilian private sector, who are not kind of listening to Lula, what does the commercial enterprise do with the red cabbage? Right? It's just received, I don't know, $10 million equivalent of red cabbage. Yeah. What's it going to do? Because it can't go and invest in a Chinese money market fund. It can't open a Chinese bank account. It's really severely restricted being able to buy Chinese treasury bills. It can't.
So hold on. I agree with you. I think we agree that the dollar is better than the red cabbage, and I think that we agree that the dollar is probably better than most other currencies in the world. But I think with that said, the dollar is probably not the healthiest currency. I think we all know how many US dollars the US printed in since COVID and in the last period. And
tell me how much they did.
well, the Fed's balance sheet went up to about 9 trillion in assets. If that's not, I mean,
what is the Fed's balance sheet measuring?
The amount of assets that the Fed is holding, and that therefore by definition equals the amount of money that they've put into the economy.
Okay, no, not really. So, okay, so you said assets, right? And so I said to you that this system we operate in, everything balances. So assets went up in the system. The Fed's assets went up in the system, okay? So that tells us that something rose at the same time and with the same magnitude because the system balances. So Fed assets went up, okay? So someone's liabilities went up, okay? Now those liabilities, and what quantitative easing is banking reserves. Quantitative easing is all about buying other assets, treasuries, mortgage-backed agency paper, etc. And then the recipient, the broker-dealer bank, receives a credit, which is a deposit from the Fed. It's banking.
It's money from the Fed. It's money that the Fed gives to whoever the counterparty is.
It's like a laundromat token. It's latent money. Okay, it has the capacity to become money because the idea and why this is motivated, there is economic logic that's motivating it. The economic logic is the more that you encourage the banking sector to accumulate liabilities, which are deposits, then the more you're giving them an incentive to lend money into the commercial private economy. And when a bank creates a new loan, then we're talking about the printing of money, but only then. And what is striking, indeed, what is the failure of quantitative easing is that despite this deluge of something like $9 trillion of latent money, the private banking sector has stubbornly refused to convert that into dollar printing. That's kind of how it's complicated, but that's kind of how the system works. Instead, they've just bought more treasury bills. And why that's happening? It's happening because 15 years ago, the private banks went crazy, and they all went bankrupt and they all got bailed out. And so they're living under the shadow of previous misdemeanors, and they're like, oh, I'm not doing that stupid mistake again.
So what?
And again, forgive me, but just finally, because, I'm just some other highfalutin guy with a funny accent. It's kind of easy to work this stuff out. Okay, let's go back to the beginning, March 2009 to today, and the Fed balance sheet has gone up $7 or $9 trillion. So you've on the thesis that you proclaim, we've printed $9 trillion. That's a hell of a lot of money. That's that's like 45% of US GDP. So from first principles, the dollar therefore would have weakened. And we were talking about how, in the gym and the dollar's looking a bit kind of out of shape and it's not looking as healthy. The dollar would have declined. There's less scarcity of dollars if we apply that doctrine. And yet the dollar has appreciated against a broad basket of all the major currencies in the world. So okay, fair point. What about inflation? So if all this money never went into the consumer's hands, as you could say, what caused the rampant inflation? Well, I'm sure you remember we insisted that people wear a mask. We really used the civil police and defense capacity to keep people locked up at home. We closed down global industrial capacity. And then in the US, we sent stimulus checks to all the good folk. And initially people went, wow, okay, and they paid off their credit balances. But then they got fed up with daytime TV, and they get fed up with video games, and they went on to Amazon. They're like, oh, I need some red socks, and the Chinese, they're back in the ranch, and they've just shuttered the factory, locking it with a padlock, and then this huge order comes in from Uncle Sam, like, oh, for Jesus, they got to open it up. I'm talking facetiously, but what we saw is an auction. There was a lot of demand, and there just wasn't the logistical capacity to address that demand, and therefore the genius of the market. It conspires to send prices to a level where it equalizes supply and demand.
So now that China's open and all these supply shocks are finished, you think that's what's bringing down inflation and not actually what Powell's doing, which is increasing interest rates so aggressively? Combination of both?
So inflation is not coming down. The rate of change is decelerating.
Correct.
That's a fact. So the rate of change in American prices, broad-based, was over 9%, and it's now, I think it was 4.6 in the last report this week. Why is that? Partly that the logistics, the supply and the demand have kind of come back. Secondly, there was just blind panic. I promise you, the one thing a retailer hates more than anything else is empty shelves. The one, and it doesn't have to be a physical retailer. The thing that Amazon hates is you go to click and it's out of stock. A missed profit opportunity. And so again, compounding this kind of oscillating out of whack supply and demand was a profound over ordering so that you wouldn't run out of stock. That accentuated, we've seen the largest rebound in nominal GDP across the world almost ever. And that rebound, part of that was all that over ordering, that over assessment of true demand. I mean, you saw this play out with Netflix, with Peloton, with home delivered pizzas and all the rest. We're kind of silly people. We look at the most immediate trend and we extrapolate it forward, and the stock market has a way of kind of making you regret some of those decisions.
Okay, so walk me through what happens now. Powell increases interest rates. Do you think the interest rate increases are finished? Do you think he continues to increase at the risk of maybe taking down more regional banks? Do you think he cares about taking down the regional banks?
I think he should care about that. So Powell, let's take his name away. Powell was implicitly implicated explicitly implicated, I should say. He did feature on prime American television, and he said, we're printing money. It's okay. This was in the dark days of 2020. We had an alien body invasion. None of us knew what was going to happen. And he came to say, hey, look, I'm from the Fed. There's kind of some good news. We got your back. We're printing money. And the guy said, you're printing money? How, do you do that with a printer? It's like, yeah, it's kind of like this digital printer. And I was watching and going, dang, Jay, if that's true, you're breaking the law. They're going to send you to prison. I mean, we've got video evidence of it. It was preposterous. I mean, he lied. They weren't, like I've tried to explain, they were not printing money. They were printing latent money. They were trying to encourage the private sector to print money, but they weren't printing money. However, of course, that coincided with this supply shock. And of course, prices, before you know it, are rising double digit. And so he kind of owns it, and he's got to do something about it. So now we're not in economics. We're kind of in the face-saving nature of trying to repair the damage and the credibility of the Federal Reserve. And so what that brought on was a very strange set of circumstances. Strange being the magnitude and the rapidity of the Fed's interest rate increases. There's a reason why the Fed is studious and slow, and it indicates these things well in advance. And the reason is that the banking sector cannot, with their deposits, the rate on a CD, the bank sector doesn't come in and immediately follow the Fed. the Fed goes, I'm hiking 50, and the banking sector goes, we'll get back to you. We'll get back to you. Okay. And the reason for that is the banks have a loan book, and the loan book takes kind of up to about 18 months to reprice. And so if the banks were to match Fed funds, their net interest margin would suddenly become negative, and they would suddenly be burning through their equity. And again, there would be a systemic shock or risk to the system. So we don't do that. If you look at Bernanke's, well, it began with Greenspan, was concluded with Bernanke between 2003 and the end of 2005. It was quarter points, pause, quarter points, pause, quarter points, pause, quarter points, right? The banking sector could deal with that, could reprice its book. So they didn't do that. I would say they were in such a hurry to repair the damage to their institution's credibility that, if you will, they've almost crucified the regional banking sector to that folly.
Is it going to? Is it going to continue? Is it going to continue to collapse? I mean, we had PacWest announced this week that their deposit actually did come down. Their stock tanked again. We've had a lot of bank collapses. I mean, I think I had a graphic showing some of the bank collapses that we've had, but I think everyone's already seen these. So you've had First Republic Bank, you've had Silicon Valley Bank, Signature Bank, you've had these guys collapse, all 2023s. So some big banking collapses, but is it finished now? Is this it? Has the Fed, by the Fed telling or by Yellen telling everyone that FDIC's got their backs and their deposits are insured, have they managed to stop a bank run?
No. Okay, so FDIC, the bank run, I don't believe, has got much to do with a flight to safety or security. It is the fact that the Fed will lend you money at 5.25%, and your regional bank will pay you, in some instances, sub 1%. It's a flight to achieving greater carry, and the Fed. I mean, all of it. None of us kind of knew this. The Fed kind of should have known. The Fed is the regulator of the U.S. banking system. First and foremost, the Fed is a bank regulator, and the regulator is just going and killed the damn banking sector. So I'm going to give them a bit of a pass. But I'm going to insist they should have kind of been curious. But this weapon of mass destruction, the iPhone, we hate banks, right? They either never give us money or they give us too much money. Doesn't matter. We hate banks, but we typically have endured. We call them names, but we can't be bothered going to, God forbid, going to a branch, lining up, speaking to somebody, filling in forms, showing your passport, pleading to get your money out. Now we just go boom, boom, right? So, I don't think there was any profound incompetence with any of the banks that have gone under. They were set up for about at maximum about $15 billion in kind of withdrawals. And in the world up until that day, before we knew this was a weapon of mass destruction, that was a kind of reasonable expectation. So the Fed's raised rates dramatically and quickly. It didn't realize that money, they could create deposit flight. And of course, remember, behind all of that, they had, after the crisis of 2008, they had come up with a whizzy idea, which was that the banks would be allowed to hold long-term financial securities, principally treasuries and agency paper, and they could designate them hold to maturity. And in such circumstances, they would not have to mark any losses, any paper losses on that portfolio, that their P&L would be sheltered. So the Fed could raise interest rates, but the effect on their portfolios would not come through their income statement. And that was a kind of a reasonable idea, but I keep talking about the conceit.
That was a scam. That was a scam. That was a scam. I mean, allowing people to hold a bill which is valued at below its par value and to mark it up at par value just because in their books they say they're going to hold it till maturity, that's a scam. I mean, if it was a private company holding investments, the auditors would take the view of writing it down, right?
Well, it is a private company. Banks are private companies, and they had there was federal exemptions given to. I mean, it happens in Europe. It happens. This is called financial repression. Whoa, hey folks, debt is 4 times the size of the economy, right? Where we've got to kind of, we've got to steal. We've got to kind of make the return to the creditors, the people who own the bonds, kind of less. And one of the means was, hey, look, we screwed up. We're enduring a silent depression. We've got to spend more and more money as a federal government. We're going to be issuing treasuries, and here's here's one for the team. If you buy them, if you mark them as you're going to hold them to the end, which is a reasonable expectation. If deposits have never been flighty in this manner, so that was a reasonable assumption. Then why not? But the advent of the iPhone and the flight of capital seeking not necessarily security or insurance, but seeking 5% from the feds destroyed that argument. So to my mind, the hold to maturity, the conceit, so you call it something kind of more emotional, but the conceit of that kind of well-formed argument is the same as the conceit of another well-formed argument from another generation, which was that if you combined mortgages from across the entirety of the United States, that because we'd never seen nationwide decline in house prices, then actually by pooling the mortgages, you were creating a AAA rated security, which was like possibly even less risky than the US government. And when that...
You know how that ended. You know how that ended.
Well, indeed. Again, that was demonstrated to be a conceit because we just needed the observation of one black swan in terms of that world, and it was a paper house that fell down. So we're kind of at the same, if you will, the 2008 was the private banks. It was folly on their part. This time around, it's the folly, I want to say, of a Federal Reserve kind of trying to restore its credibility, having made this ridiculous allegation that it was printing money back in 2020.
So Hugh, we are running out of time, but I just want to get a view from you. What do you think right now is the biggest risk to the economy? What do you think is Elon spoke about an economic enema that's about to hit us. I've heard your views on many other stations and podcasts. What do you think right now is the biggest risk? What do you think is the biggest mess up and the biggest risk in the economy?
I mean, the biggest risk is the Fed. Because, that was kind of simple, folks, right? Money is leaving these banks because they pay you. If you look at Citibank, there are some accounts they offer you 5 basis points. You can get 525 basis points from the Feds, right? So, and what does the Fed do, right? So that's a problem, and that's creating flighty deposits. It's undermining the profitability and the risk-seeking behavior of the banking sector. The banking sector that prints money, the banking sector that helps out small, medium-sized enterprises, you, the household. And what does the Fed do? And we've already had bankruptcies. And what does the Fed do? It's like, hey, we're from the Fed. Do you want another 25 basis points? We were 5. We're thinking, why don't we give you 525 basis points? I mean, that just creates more and more capital flight. So the Fed's behavior is, I don't understand it. What is my things? The problem is the bozos. The bozos are destroying the economy. But it's said. It's said. It doesn't matter. The damage is done. You don't need me.
So what happens? So what happens? So if a damage is done, what happens next? Well, so damage is done. What happens next?
Bad things happen. There will be bankruptcies more, and they'll probably spread across different sectors. Europe's not out. This isn't a US-centric thing. You get absolutely no return on German savings accounts. and the ECB, the blind bats. I mean, the guys who raised interest rates in 2008, the guys that can only see inflation, the guys that have got no precedent of getting anything right. At some point, you're going to see the same thing. You're going to see capital flight in Europe. Just so far, people, I don't know if, does anyone have one of these in Europe? I mean, does anyone have electronic banking in Europe? I don't know, but I think they're going to start like, hey, ECB's offering me a lot more. So what's going to happen in terms of the Fed? The Fed's just, you have to see gaps down in the market, price gaps, like people just, saying, get me out. I can't tolerate this. What you are seeing is you're seeing a deceleration in inflation that will continue, but you'll start seeing you are seeing real. I mean, what am I talking about? Have you seen the German? Have you seen European data? Have you seen what people are actually consuming on like food? I mean, that's the one thing. I mean, maybe Netflix, you can skip it. I was going to say maybe you can't have a cigarette, but you probably need to have a cigarette. But food, you gotta feed the kids. I mean, look at a chart of food consumption. It is, Jesus, Holy Mary is collapsing. What are we doing to the poor folk? Well, we're putting them on this financial diet. It's shocking. It's wrong. It's egregiously wrong. China. I mean, China. I mean, here's a question for you, right? So, U.S. economy is, I want to say 22.5 trillion US dollars. Yeah. In dollars, what are the Chinese bank deposits? The totality of Chinese bank deposits, and to help you there, of course, the Chinese economy today is smaller than the US. Let's call it
I have no
16.
idea.
Right. It's $40 trillion. $40 trillion. The system is so screwed. This is why they have capital controls. Can you imagine if you could get your money out of China? You would, right? They printed so much damn money. So again, de-dollarization. I mean, the folk are just, they say I'm smoking shit, but really, I actually have an economic mind. I hang with the 5 people that actually understand things.
Who are those 5 people?
Yeah, ask me another question.
Here, listen, we are out of time, my friend. It's been amazing having you on. We'll chat again soon, my friend. Much love from the fam. All right, so that's Hugh. He's got some pretty strong views, and he has eaten up all of our time. I didn't expect to spend so much time with him, but he was talking about some interesting stuff, different stuff than the stuff we're actually used to. So listen, we are going to Miami next week. Just for those of you who don't know, we are going to Miami next week. There are 1 or 2 tickets left if you want to join us. So if you do want to join us, you there's a link below. You click on the Bitcoin conference. You got to put in the price of tickets increases in 13 hours. You put in the Crypto Banter link. You get access to the VIP party, to the dinner with myself, Sheldon, Hustle, Miles, Carl, everyone, and you get to hang out at the conference with us. So that's the first thing. Next thing is, remember, these shows are brought to you by NordVPN. I showed you guys how these guys really, really, really support our show and support crypto. So use them because it masks your IP address and it does keep you very, very, very anonymous in crypto. And I think right now there's never been a better time. And to protect your IP address cost you less than $4 a month. You got to do it. I mean, come on, if you're in crypto, you got to do it. And then remember, in the Bybit competition, I did get smashed. I actually got smashed on my positions, but I actually think I'm still okay. I'm 6% up. I'm in 150.85 position. Hopefully I can recover. I am definitely going to be trading this over the weekend. I'll let you guys know what I'm trading, so keep following me on Twitter. And then lastly, as I said to you guys when we started the show, we have launched Banter Bubbles. Just want to quickly just show you how the thinking behind it is, and if you guys want to use it, use it. Remember, it is in beta. This is not the final product. It's a beginning product. And our thinking here was very simple. Our thinking was, we said, look, we love crypto bubbles. We love this product. We know we use this product every single day. But the problem for us is we wanted to understand, if we woke up in the morning and we saw that, for example, Pepe was red, you want to know what's going on. And that's the part that was missing. So we built a chat into every single one of these bubbles, as you can see. The only way to chat is to actually go and sign up with Twitter, and you have to log in using your Twitter profile. So the same person that you are on Twitter is the same person that you're going to be on Banter Bubbles. And that is just to keep the bots and the spam out, and also just that people keep their username. So you have to log in through your Twitter profile. It's the only way to do it. There's a chat in every single bubble. So like if you want to talk about render, you can go and talk about render. If you want to go and talk about 𝗏𝗏𝗏𝗏 or Flow or Radix, just go and talk about Radix. And the idea is to build communities inside bubbles that are moving, and that way we can see what's going on. I mean, as I say, test the site, have fun with it. The site is going to get better and better over the weekend, and maybe even we will do some releases on Monday. You'll also very, very, very soon, you'll be able to trade directly from the bubbles. So we'll actually have order books here, and you'll be able to trade directly through your favorite exchange into the order book. So it's going to be a very, very, very degen product. Yeah, and you can see you can join our Bybit competition from here. You can join the 𝗘𝗍𝗍𝗍 competition here. We're going to be linking it up to DEXs and stuff like that. So very, very, very excited about this product. Go and check it out, banterbubbles.com. It's your product. It's free. It's your product to your community. It's for you guys to have fun, to start building communities inside the bubble. So as I said, if you want to go and talk about Cardano, I see some people are here talking about Cardano. Go and talk about Cardano. If you want to post pictures, videos, go and do it. This is what it's about. And the idea here is to build social trading. If tokens are going up, we want you guys, or down, we want you guys in the bubbles telling us why the tokens are going up and why the tokens are going down, and posting your favorite charts. And we're going to be releasing amazing, amazing, amazing new features. So listen, have fun testing it out. I'm counting on you guys to break it, because we want to see what happens when it does break, so we can fix it for you guys. But remember, it's not the final product. So don't judge us on this product. It's just it's a product that we have been developing for less than a month, and we just decided to launch it with you guys, so that you can experience what we're building for you guys, for our community to use, and hopefully you'll use it soon. Okay, so next week we're in Miami. There will be a show on Monday. There will be a show on Tuesday. There will be a show on Wednesday. There will be a show on Thursday, and there will be a show on Friday. So don't worry, we'll be here every single day. On this weekend, there's going to be no shows because I'm going to be flying. I'm flying to Miami, and then the following weekend we're actually flying to Monaco to the Grand Prix. So if you're going to be in Monaco, let us know. Let's quickly have a look at the markets. 26,400 Bitcoin, still above this 200-week moving average. We can quickly take one last look at the bubbles. I see 𝗏𝗏𝗏𝗏. Everything's bouncing a little bit, but nothing except for the meme coins, which for me is a very, very healthy sign. I'm quite happy that the meme coins. I want the meme coins. I want the meme coins to be coming down. I want the air to be taken out of this market. Guys, I will see you again on Monday. Until then, have fun. Trade well, my friends.